Good morning and welcome to Stock Market Today. It's Tuesday, November 27th, 2018, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can follow me on Twitter. I'm at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics in conjunction with StockCharts.com and StockCharts TV. And a special thank you to the team at StockCharts for hosting this show in the 9:15 slot. Every day, U.S. equities were higher in Monday's trading, finishing near their best levels of the day and reversing some of last week's losses. Consumer discretionary, technology, and financials were the best performers, while defensive sectors were the biggest laggards. All sectors, however, did finish in the green on the day. Treasuries were weaker across the curve. The dollar was stronger on the yen cross, but little changed against the euro and sterling. Crude settled up 2.5%, 2.4% really, after selling off by 7.7% on Friday. Again, as I said, your outperformers were consumer discretionary, tech, financials, comm services, and energy round out the top five. Your underperformers, consumer staples, REITs, utilities, industrials, healthcare, and materials. But again, everybody finished up on the day. And as we get to the desk this morning, a little bit of a different picture. Some commentary out of President Trump overnight regarding trade sends futures down about 20 basis points as we get to the desk. Asian markets were mostly higher overnight, though the gains were kept in check by those comments. European markets are slightly lower this morning. Treasuries are unchanged to slightly stronger. Dollar is mostly flat against the euro and yen. Gold up 10 basis points. WTI crude higher by 20 basis points after that 2.5% gain on yesterday. As we look at the S&P 500, not a ton has changed, right? Nice rally. You can see this nice, opened on the lows, closed near the highs. That's an encouraging development on a one-day basis, but the burden of proof does remain on the bulls. Support is in the 2570 to 2600 zone. You can see the cluster back here in the beginning of the year, as well as the low from late October. RSI does remain in bearish ranges, but that positive divergence at the recent lows is still a potentially bullish sign in the near term. Going to have some wood to chop right around this 2700 area. Round number resistance also kind of closes the gap that opened up last week. In another bullish development, Chaikin money flow does stay bullish despite the sell-off that we saw in the market last week, and then upticked a little bit yesterday with that move higher. So as I said, resistance does come into play near 2,700. We'll be watching what happens here for the duration of the week. But as I said, futures are pointing to a slightly lower open here this morning. So your market in a minute. What I'm talking about in my note to Chaikin Analytics clients today is that stock stage of rally following last week's selling. Nasdaq led that rally, led major markets higher on the day, and we'll be able to take a look at that in a second. Sector trends remain defensive, but may be extended in the near term. We'll use healthcare as an example of what I'm talking about there. Financials are beginning to outperform, and I do find that interesting. It's what we like to call a personality change, and we'll walk through that a little bit later in the show. Futures, as I said, do point to a lower open. Power bars for the major indices. Dow back to even, 5 bulls and 5 bears following its performance yesterday, up nearly 1.5%. S&P 500 up nearly 1.6%. Sees an improvement in its ratio as well. 58 bullish or very bullish stocks for 92 bearish or very bearish stocks. There's that Nasdaq outperformance, the leadership on the day. 13 bulls to 20 bears really narrowed that gap. You notice Nasdaq was up about 2.3% yesterday. Small caps, slight underperformer, but held their own. 183 bulls, 474 bears as it added 1.3%. There's that downtick in bond sending yields higher. Comm services had a nice day, up 2.28%. 5 bullish or very bullish stocks there, 2 bearish or very bearish stocks. This is an interesting group to me because with the reconstitution of the sectors, comm services still has a lot of those traditional telecom companies that have defensive properties, but it's added names like Facebook and Google of late, which have come under pressure. So the relative trend there is basing, and you really have to rely on stock selection within that group. Chaikin power bars, small cap stocks are more bearish than large cap stocks, and major indexes are mixed. Look at our stock of the day now. Reinsurance Group, from the insurance industry. It's a part of the market that we have liked. Closed at 147.67, up 1.08% yesterday. Chaikin Power Gauge rating for Reinsurance Group is very bullish due to very attractive financial metrics, very strong earnings performance, and very positive expert activity. 20 factors that fall within these four main categories line up to give us a very bullish Chaikin Power Gauge rating, and we are in the right part. We're fishing in the right pond here. Very bullish stock, strong trend, strong industry group. Ribbon at the bottom of the screen shows us that the rating turned back in early November, and the market and model are in agreement. Stock's been outperforming the market roughly since late October, and the intensity of that outperformance has picked up recently. So the dynamic duo is in gear here. And when I talk about checking the boxes, I talk about taking a weight of the evidence approach to stock selection. We look at, the rating, the trend, the industry strength, right? Outperforming the market. This one actually checks all of the boxes. As we can see, it's oversold with bullish money flow above the rising long-term trend line, has some support around the 145 area. So a very bullish stock with a strong trend and a strong industry that's oversold while outperforming the market with bullish money flow is exactly the type of name that we like to add to the portfolio on the long side. Take a look at RGA today. Ticker symbol RGA, Reinsurance Group, in a part of the market that we like, checks all the boxes for a potential long idea as we apply our weight of the evidence approach. Turning now to the sector movement over the last 5 days, you can see communications, top of the list, up 80 basis points. Discretionary had a nice day yesterday, some positive read-through on weekend holiday shopping. Tech moving up the list. That's what we like to see. Healthcare rounds out the top four. Energy remains the biggest laggard as price of oil really weighing there. Consumer staples is a defensive group that's come under some pressure of late. Interesting to see how that plays out. Remember, I said some of the defensives did look extended in the near term. Real estate kind of fits that bill, as do utilities. Industrials, financials, and materials make up the middle of the pack over the last 5 days. Our industry in focus today is healthcare services, which over the past 6 months, this subsector has outperformed the S&P 500 by 7.84%. Its power bar ratio, which measures future potential, is strong. We have 13 bullish or very bullish stocks for 8 bearish or very bearish stocks. Group is currently ranked number 2 of the 21 subsectors that we look at. Now, remember, healthcare has been leadership. We like to drill down and see within the sector where the leadership has been. And I think services really do provide a bit of the defensive attributes that investors have been looking for there. Some of the indicative names: Express Scripts has a very bullish Chaikin Power Gauge rating. CVS, Health Corp, ticker symbol CVS, has a very bullish rating, as does Anthem, ticker ANTM. Very bullish Chaikin Power Gauge rating. And let's drill down on one of those stocks here today. Anthem closed at 281.33 yesterday, up 21 basis points. Very bullish stock with a strong trend. Weak industry group because it's part of medical care. I like to think of it as medical services, but let's take a look at the analysis. Ribbon at the bottom of the screen tells us we've been mostly on a bullish rating since the June-July timeframe. Stock's been outperforming the market since early to mid-June. Overbought, oversold ratio approaching oversold conditions. And just given this market environment, I like to wait for premium setups. I'd rather buy the stock when it's oversold. Chaikin money flow is neutral. Now, we went from persistently bullish to some profit taking and some bearish activity, and now we're getting back into neutral. Stock is riding a rising long-term trend line, has some support around the $270 level. It is above that rising long-term trend. I think Anthem looks interesting. If you want to be aggressive here on the long side, can't argue with getting involved here today, but I just think that as the market remains choppy, as the market tries to carve out a base, you can wait for premium setups and premium opportunities. You can wait for these stocks to become oversold within the context of uptrends to open long positions. But hey, we all have a different view of the market. We all have a different strategy. One of the ways that you could look at it potentially is to buy half a position here and then wait to see what happens. Buy the rest on a breakout. This way, you're not kicking yourself if you missed it. But if the stock continues to move sideways and becomes oversold, you can then add to your position. Looking at yesterday's S&P 500 movers and shakers, your gainers and losers on the day. Newell adds over 8% as the market seemed to be happy with their announcement of a hiring of a new CFO. Wynn kind of catching an oversold rally here. Remember, this is a name that we've been uber bearish on for a while. Kind of came off of that view with the stock just under $100, and now it's beginning to rally. Could be interesting to see if that trend is changing. Didn't see any real news to drive the stock up nearly 7% yesterday. L Brands up 6.75% as some of the analyst reads on holiday shopping are coming back positive for the start of the holiday shopping season over Thanksgiving weekend. So that sent that stock higher. Scana SCG up 5.8%. They did catch an upgrade to start the day yesterday. And Holly Frontier joining the refiners in a move higher as oil moved out of deeply oversold or rallied from a deeply oversold position yesterday. On the loser side of the board here, Campbell Soup down 3.75%. That name is an activist name. Some announcements on a slate of board members. A lot of back and forth in that story. Hard to really discern a trend. UAL, a bullish stock that comes in over 3% as the price of oil moves higher. Cabot Oil and Gas down 2.5%. Cabot is a gassy E&P name. You know, some of the E&P stocks are levered more towards drilling for oil. Some are a mix of oil and gas, or some are levered more towards gas. So Cabot benefited when the price of natural gas was moving higher, and now as it's kind of stabilized and retraced a bit, Cabot is going to see the negative aspect of that trade as well, as they are more of a gassy E&P. Interesting to note that two of the other losers are from that Staples group, right? Remember I said that some of these defensives looks like they're extended in the near term, Staples being one of them. General Mills and ConAgra, you know, food companies generally viewed as staples. Those stocks round out the bottom 5 list of losers. So as I said, the Nasdaq leads stock higher on the day. And what's interesting to me here is that the Nasdaq has a similar dynamic to the S&P 500. You know, RSI is still in bullish ranges, as bearish ranges rather. But as we test the support levels from earlier this year, we did create a slight positive divergence, which has led to this gap higher. Now, the 50-day is on the verge of crossing the 200-day. Chaikin money flow is bullish, so I do find that interesting. You know, it'd be interesting to see the markets here if they kind of capitalize on some of these divergences that are taking place, some of these oversold conditions as we test support, and see if this is the beginning of a base building process. Obviously, nobody knows the answer to that question, but we'll hunt around for some signs of stabilization, and positive divergences are some of the first signs, especially when they take place at support. Those are some of the first signs that we look for. And remember, the NASDAQ was leadership to the downside. So to the extent that they stabilize and move higher, that could have positive implications for the rest of the market. And here's what I was talking about with defensive sectors leading, but extended. Here's XLV relative to SPY. You can see the nice break above 2-year resistance, and now it's beginning to consolidate. And what I mean by extended is look how far we are from this 200-day moving average. Wouldn't be surprised to see this group and some of the other defensives take a bit of a breather and consolidate. Now, momentum still confirming the strength as the RSI is in bullish ranges and trending higher. And on an absolute basis, XLV is in a nice steady uptrend, consolidating gains since October. So the outperformance is still in place. We're just making the case that maybe it's a little overdone in the near term and needs to consolidate. At the very least, I wouldn't be chasing overbought healthcare stocks currently. As I said, I think you can wait for some oversold conditions. And here's what I was talking about with the financials beginning to outperform. Now, the financials, the XLF has a bullish Chaikin Power Gauge ETF rating. And what's interesting to me is that as the XLF has become oversold, Chaikin money flow has shifted to bullish. But and we're beginning to outperform relative to the SPY. So really, after a strong series of underperformance, really starting in mid-May, financials are beginning to outperform the market here. That's an interesting shift. This is where we look for potential opportunities as leadership changes. Now, we are still below the falling long-term trend line, but I think this personality change is noteworthy. And if you're looking for a way to kind of play it, I like Evertech. It's more of a fintech type name. EVTC, very bullish stock, outperforming the market, oversold with bullish Chaikin money flow. That name does look interesting to me today. So that's it. Sign up for our email, chaikinanalytics.com/today. Free stock ideas and follow along with this show. I will see you here tomorrow.